Let us see the next question. The following information relates to Zeta Limited, a publishing company. So information is provided to us regarding a publishing company. Selling price of a book is rupees 15. So price is provided to us for a book 15 rupees. Sales are made on credit through a book club and invoiced on the last day of the each month. So the sales is through a book club and invoice is made on the last day of the each month. Variable costs of the production per book are material rupees 5, labor rupees 4, overhead rupees 2. Sales manager has forecasted the following volume of the sales. So we have been provided with the information about the month, about the number of books. So on monthly basis, how many books we are going to sell is provided to us. The question says that the sales manager has made this forecast. It means that the sales information is given to us. Customers are expected to pay as follows: 40% 1 month after the sales, 60% 2 months after the sales. The company produces the books 2 months before they are sold, and creditors for material are paid 2 months after the production. It means that the average payment period for the raw material is 2 months. Variable overhead are paid in the month following the production, means average payment period is 1 month. For payment of overhead, and are expected to increase by 25% in the month of April. 75% of the wages are paid in the month of production and 25% in the following month. So all wages are not paid simultaneously. It is paid into two parts: 75% in the same month and 25% in the subsequent month. A wage increase of 12.5% will take place on 1st of March. The company's corporate tax of 10,000 is due for payment in the month of March. The company is going through restructuring and will sell one of its freehold property in April for 25,000. But it is also planning to buy new printing press in April for 10,000. Depreciation is currently 1,000 rupees per month, and it will increase to rupees 1,500 after the purchase of machinery. Opening cash balance on 1st of February is 3,200. You are required to prepare cash budget for, highlight the portion, 3 months, starting from February to April. I request all of you to go through the question, and then we'll discuss how we are required to make calculation of answer. Please go through the question. Dear students, over here in this question, too much scattered information have been given to us. So what we will do, friends, first of all, we'll make the calculation of the answer like this, wherein we'll try to extract all the information, that what is the sales of the company, what is the material cost, what is the labor cost, what is overhead cost. Like that, on monthly basis, we'll try to gather all the information. Once we gather all the information, then we'll prepare the cash budget. Yes, what I want to tell you, friends, is we'll prepare first of all a small working note, wherein we'll mention all the revenue, we'll mention all the expenses, and with that say we'll start preparing we'll start with the answer. See, initially when we are calculating the revenue, when we are calculating the expenses, we are not concerned that say when they are paid or when they are received. We are just concerned that say what is the monthly expenses and what is the monthly revenue. Then in the secondary stage, we are going to prepare the cash budget, in which we will take into account when any of the expenses are paid and when any of the income is received. The income is consisting of the revenue, that is sales only, but still we will be focusing on that point, say in the second part of the question. But in the first part of the question, we'll just have the working that revenue and expenses to be calculated. Basically, friends, what happens at number of times the students have a question to ask me that, sir, it is difficult for us to understand that, say, from where we have to start with the answer, looking to the information of the question. Do we have like some standardized step with which we can do the answer? The answer to the question is right now no. However, I assure you that, say, gradually when you will do the answer, you will be able to know that, say, how you are required to do answer. What is the process, or you will be able to know definitely that, say, doing answer in this sequence, you will be able to get to the final answer. But that will come after some amount of the practice. I request all students to write down answer along with me. Working note number 1, calculation of sales, comma, production, comma, sales revenue and expenses. We'll prepare a table wherein it will be prepared starting from December to June, whatever the number of months information is given to us, because we don't know that, say, which information will be useful. So column number 1 is month, that is M. Column number 2 is sales. Sales is of the number of books. Then we'll have the printing or the production, that is number of books that we are going to print. Then again the sales, that is the amount term. Then direct material, direct wages and variable overhead. These are like additional expenses. So sales is in terms of the number of books. Printing is again in terms of number of books. Sales is in rupees term. Material is in rupees term. Wages is in rupees term. Variable overhead is again in the rupees term. I request all of you to write an answer along with me. It is the month of December, month of January, month of February, March, April, May and June. Number of books that we are going to sell on monthly basis are 1000, again 1000, 1250, 1500, 2000, 1900 and 2200. That is the sales in terms of the number of books. I want somebody of you to write in the chat box that how many books will be printed in the month of December. Okay, dear students, the question is providing the information like this. Read language of the question carefully. It provides that the company produces the books 2 months before they are sold. So month in which you sell the goods, before 2 months, say they are produced or they are printed, like that information is given. So basically we will be having a working like this. In the month of December, we are going to produce 1250 number of books. Like that we understand. And so on, we will be having, so the number of books to be printed. So over here it is 1500, then it is 2000, then it is 1900, then it is 2200. We do not have the information about the production for May and production of June. If at all we do not have such information, then in that case, it must not be required. We don't have to bother about it. Okay. As far as the sales value is concerned, for that, so the information is given to us directly in the question. It is, so the selling price is provided to us as 15. As I told you that say we are not concerned that when we are going to receive the amount. That is the reason I will mention the answer like this. It is 1000 number of books into 15 rupees is the selling price. That comes to 15,000. Again 1000 number of books into 15 rupees as a selling price. That is 15,000 rupees. 1250 into 15. That comes to 18750. 1500 into 15. That is 22,500. Then it is 2000 into 15. Sales value will be 30,000. That is the way we are supposed to make the calculation of the sales value. I want somebody of you to write in the chat box that what must be the direct material cost for the month of December. Dear students, the direct material cost is given to us in the question as 5 rupees per unit. So what will happen, we understand that over here, it will be number of books that we are going to print is 1250 into 5 rupees per unit. That comes to 6250. Next, it is 1500 number of books into 5 rupees per unit. That comes to 7500. And so on, we are required to consider the direct material cost. Always remember that whatever the variable production cost is connected to the number of units that we produce and not the number of units that we are going to sell. That is the reason the number of units that we have printed over here, because it is like a publishing company. So the number of books that we have printed into direct material cost per unit will give the total direct material cost. So it is 2000 number of books into 5, that is 10,000 rupees. 1900 number of books into 5, that comes to 9,500. Then it is 2200 number of books into 5 rupees per unit, that comes to 11,000. This is the way we will be having the cost of the direct material. I request you to fill up the column for the direct wages and then I will do for you. So friends, over here in the direct wages, the question is providing the information like this, that direct labor cost is 4 rupees per unit. So in that case it will be 4 rupees per unit into 1250 number of units. That comes to 5,000. Right now friends, when we are preparing this for keynote, we are not concerned that say when sales value is received and when expenses are paid. I am just focusing on a point that what is the revenue and what are the expenses on the monthly basis. When it is paid, when it is received, that will be taken into account in the cash budget. In the month of January, it is 4 into 1250. I'm sorry, 4 into 1500. that comes to 6,000. Then it is 4 into 2,000, that is 8,000, and so on. I want you to write in the chat box what is the direct wages cost for the month of March. Everybody is requested to pay attention. Apparently, I feel that it is 1900 into 4. Apparently, I feel like this, and I write the answer 7600. However, 7600 is wrong answer because the question is providing the information like this. The question says that a wage increase of 12.5% will take place on 1st of March. A wage increase of 12.5% will take place on 1st of March. So over here, say we are required to write the answer in this way. It is 1900 into 4, 7600 plus 12.5 percentage. So whatever the answer of 7600 that we compute plus 12.5 percentage, that is 8550. Similarly, for the month of April, it is 2200 into 4, but this is incomplete answer plus 12.5 percentage. So 2200 into 4 plus 12.5 percentage, that is 9,900. I request all of you to write down answer for direct wages column and try to complete the answer for the variable overhead column. So friends, variable overhead is provided to us as 2 rupees per unit, and it has been given to us like this, that are expected to increase, this variable overhead are expected to increase by 25% in the month of April. Like that information is given. So what will happen, dear students? Something like this will happen. We are required to consider 1250 into 2. That comes to 2500. Then 1500 into 2. That comes to 3000. Then it is 2000 into 2. That comes to 4000. Then it is 1900 into 2. That comes to 3800. In the month of April, it has been given to us that it will increase by 25%. Are expected to increase by 25% in April. So what will happen? It is 2200 into 2, that is 4400 plus 25%. So 4400 plus 25%, that comes to 5500. This is the way we are required to consider the variable overhead expenses. So dear students, the first simple working note is over, wherein we are having on monthly basis what is the revenue that we have and what are the expenses that we have. We have the information about the sales revenue, so I am writing over here 1900 into 15. Whatever the information that we have, so that we are going to write. Certain information we do not have, so we will not write. Then it is 2200 into 15, that is 33,000. Okay, since we do not have the production for May and June, so we are not writing the production expenses for May and June. This is the first simple working note that we prepare. Okay, the next is the important working, and that is the answer of the question, that is cash budget. I request all of you to write down answer along with me. Preparation of monthly cash budget from February to April. That is, for these 3 months, we are supposed to prepare the cash budget. So, column number 1 is particulars. Opposite to that is month. In that, say we have February, we have March, and we have April. For these 3 months, information have been given to us. In that, so we'll start with the opening balance. The question is providing the information about the opening balance, that opening cash balance on 1st of February is 3200. So we mention over here 3200, that is the opening balance. Afterwards, we have been provided with the information in which, starting from the beginning, the following information for Zeta Limited: selling price information is given, cost information have been given, number of units that we are going to sell is given. Here is the information which is important. The customers are expected to pay as follows: 40% is paid 1 month after the sales, and 60% is paid 2 months after the sales. So we would be having collection of sales. In that, it is 40 40 percentage, 60 60 percentage. You can see that, so the information is provided to us starting from the February month, which is required. Okay, sales is provided for the month of February. So this is February month. Sales is 18750. It has been given that, say, 40% is collected 1 month after the sales. So what I am doing, friends, in the that is in the column of March, and against 40%, I am writing 18750 into 40 percentage, and 60% in the month of April, 18750 into 60 percentage. That is the way we are supposed to write the collection. After February, March month. So March month sales information is given 22,500. So 40% of 22,500 would be collected in April. So in the column of April, and against 40% we will mention 22,500 into 40%. Remaining would be collected in the month of May, and we are not concerned with that. Whatever is the sales of April, that would be collected in the month of May and June. Again, we are not concerned. Okay. Before February, it is the January, and sales of January is 15,000. So 40% of 15,000 will be collected in February. And 60% of 15,000 will be collected in March. Okay. Before January, it is December. Sales of December is again 15,000 coincidentally. 40% of 15,000 would be received in the month of January. Its effect must be incorporated over here. And remaining 60% would be collected in the month of February, which we are going to mention over here. This is the way the collection of the sales will be mentioned. Please write down answer. So friends, we started with the month of February. Sales of the February is 18750. Of that, 40% is collected 1 month after the sales, that is in March. In the column of March, and against 40%, 18750 into 40%, That comes to 7,500. Remaining is collected in April. So in the column of April and again 60%, we are mentioning 11250. Okay. After February it is March. Sales of March is 20 to 500. Of that 40% will be collected in April. That is 9,000. Remaining is collected in May and we are not concerned. Sales of April is collected in May and June. We are not concerned. Before February it is January. Sales of January is 15,000. Of that 40% is collected in February and 60% is collected in March. Before January it is December. Sales of December is 15,000. Of that 40% is collected in January and 60% is collected in February. That is the way we are supposed to mention the collection of the sales. Okay. Now this information is given. The question is providing the information. The company produces the books 2 months before they are sold and creditors for material are paid 2 months after the production. I request you to write in the chat box that what must be the payment to creditors in the month of February. Payment to creditors in the month of February. I request you to write answer in the chat box. Friends, answer is again very simple. The way we have the production 2 months before sales. Similarly, the question is providing the information that average payment period is 2 months. So whatever the purchases of the December, that will be paid in February. That is the way we are supposed to show the payment to the creditors. So we will have payment to the creditors 6250. Over here, for the purpose of understanding, I am writing December. Means purchase of the December is paid in the month of February. Okay. After that it is 7,500 and 10,000. It is 7,500 and 10,000. That is the month of January and that is the month of February. So average payment period is 2 months. Variable overhead are paid in the month following the production. So this information is provided for the payment of the variable overhead. That's very simple. It is paid in the next month. So write down answer. Payment of variable overhead. Expenses of January will be paid in February. Expense of the February will be paid in March. And expense of March will be paid in April. That is what we understand. So January month expenses of the variable overhead is 3,000. February it is 4,000. And for March it is 3,800. So these expenses will be paid after 1 month. So it is 3,000, then it is 4,000, and then it is 3,800. Expense of January is paid in February. Expense of February is paid in March. Expense of March is paid in April. And are expected to increase by 25% in April. Its effect is considered when we were preparing the statement of the expenses. 75% of the wages are paid in the month of production and 25% in the following month. Okay. I request all of you to consider this adjustment and write in the chat box that what is the payment to be made in February, March, in April. So friends, it has been given that 75% is paid in the same month. Like that information is given. So see, we have to focus like this. Direct wages, month of February, the amount is 8,000. Okay. So what will happen? This 8,000 will be split into two parts. So please take down answer along with me. Payment of direct wages. 75%, 25%. We understand that say this 8,000 into 75% and this 8,000 into 25%. Like that we understand. Okay. Next is 8550. This 8550 into 75%, 8550 into 25%. Next, April is 9,900. So 75% of 9,900 will be paid in the same month. Remaining will be paid in the following month and we are not concerned. Before February it is January month. January month expenses are provided as 6,000. 75% of 6,000 will be paid in the same month and 25% in the following month. Like that we understand. So my suggestion is that say you take one wages, you split both of them. You take another wages, you split both of them. So 8,000 into 0.75 is 6,000. 8,000 into 0.25, that is 2,000. 8550 into 0.75 is 6413. 2137. 9,900 into 0.75 is 7425. Remaining in the next month we are not concerned. 6,000 of that, say the 75% must have been paid in the earlier month and 25% is 1,500. This is the way we are required to show the payment of the direct wages. Okay. So this is the way the payment of wages is shown. Afterwards, like almost everything is over. Corporate of tech, that is tax of 10,000 is due for payment in the month of March. Dear students, in spite of the fact they have provided the word due, we have to understand that say as if we are going to pay, we have to show the payment. Because basically we want to know that say after making all the payments which are becoming due, do we have the sufficient funds or not? That is the reason say we are required to show the income tax payment. In the month of March, it is 10,000. We want to know that, understand carefully, we want to know that, say, do we have the sufficient funds to make all the payments which are becoming due? That is the reason, say, we will show this as a payment even though it is becoming due. The company is going through restructuring and will sell one of its freehold property in April for 25,000. So we'll mention over here sale of freehold property of fixed asset. In the month of April, it is an amount of rupees 25,000. Next, but it is also planning to buy new printing press in April for 10,000. So we will have purchase of fixed asset, that is an amount of 10,000. That is in the month of April. Depreciation is currently 1,000 rupees per month and will rise to 1,500 after the purchase of machinery. Friends, how to incorporate the depreciation information in the cash budget? We understand that say it will not have any impact. Why? Because it is a non-cash item. Opening cash balance we already have considered. You are required to prepare the cash budget. So now what will happen? We are required to take the opening balance plus all the receipt minus all the payments, that will give the closing balance of February, that is opening of March. Closing of March is opening of April, and closing of April is the final answer. So we will have February month opening balance 3200 plus collection 6000 plus collection 9000 minus 6250 minus 3000 minus 6000 minus 1500, that gives a closing balance, it is 1450. Dear students, if at all we have the negative balance, then you don't have to worry. You have to assume that say the company is having adequate overdraft facility, so you don't bother about it. This is 1450 plus 7500 plus 9000 minus 7500 minus 4000 minus 6413 minus 2000 minus 10,000, that comes to 11,963, and the answer is negative. There is no botheration. We assume that say the company would be having the overdraft facility. So it is negative 11,963 plus 9,000 plus 11250 minus 10,000 minus 3800 minus 7425 minus 2137 plus 25,000 minus 10,000, and the closing balance is 75 negative. This is the way we are required to prepare this simple cash budget as a part of the answer. So starting with the revision of the entire answer. In this question we are required to prepare the cash budget for 3 months, February, March and April. We have been provided with the information about the sales, printing based on the sales, selling price, material cost, labor cost, variable overhead and other miscellaneous items like payment of taxation, purchase and sale of the fixed asset. First of all, what we have done, dear students, we have first of all gathered all the information about the revenue and about the expenses on monthly basis, starting from December till the June. On monthly basis we have calculated what is the revenue that we have, what are the expenses that we have. That is what we have calculated. This is what we have done on the monthly basis. Importantly, remember that as far as the production related expenses are concerned, it is connected to the production. So the variable production expenses will be calculated based on the variable production cost, in a way that say based on the number of units that we are producing and not selling. Small important points. Another, you just take care. Let's say there is an increase in the direct wages and there is an increase say in the variable overhead in the month of March, April respectively. Further we will understand that say the wages will increase from 1st of March onwards. For any other month, if at all we don't have information, then in that case you just ignore it because it would not be relevant for the purpose of doing answer. We do not have the production information for the month of May and June, so we'll ignore it. Next is the preparation of the cash budget for the 3 months, February, March and April. We start with the opening balance. Collection information is provided to us, 40% and 60%. So the February month collection, March month collection, April month collection that we have returned. Payment to the creditors average payment period 2 months, payment of the variable overhead, payment of the direct wages, income tax, sale and purchase of the fixed asset. This is the way we are having the preparation of the cash budget on the monthly basis. For any of the month when we have the negative balance, we don't have to bother. We assume that whatever this negative balance that we have is equal to the amount of the overdraft facility that we will obtain. So you have to just carry forward so that negative balance.